Welcome to part one of the three-part course intro. In this video, I'm going to try to convince you of the importance of this course for your future business career. I'm also going to cover the course's learning objectives. This course covers two primary areas necessary for business success: managerial accounting and taxes. By now, you should have completed a course in fundamental managerial accounting. A fundamentals course is generally designed to teach you some of the basic definitions and applications of managerial accounting. We're going to examine some of the same managerial concepts, but maybe a bit more complex than what you covered previously. But we're also going to review some of the same tools to reinforce what you've already learned. For many students, you emerge from managerial accounting without a good sense as to what its true purpose is. This class has no hidden agenda. I'm not trying to make you into accountants, although we always have room for more. Instead, you need to understand how some managerial accounting concepts might affect you as you embark upon a career in business. If you are a department manager, you will most likely be held responsible for either a cost center or a profit center. It is therefore in your best interest to understand how those costs or profits are being calculated. How are costs being allocated to you? What costs can you control and what costs can you not control? How can you manage your profits and margins? And how can you manage your employees to help you meet those profits and margins? What information can you gather to assist you in making good decisions about how to employ the resources of the business you work with? Let's examine a very simple example. You own a small business. Let's say it's a paint store. You buy paint from a paint manufacturer and you sell paint to your customers. Business is good, but you are considering ways to increase your revenues. The retail paint market is fairly saturated, and you are tied into a single paint manufacturer to distribute their paints exclusively. You already sell all the necessary painting tools and equipment and have excellent relationships with a number of painting contractors in town. Trying to garner additional market share has proven difficult in that many painters have their own paint brands they prefer and are not particularly price sensitive since they charge those costs through to their customers. And given the maturity of the paint market, prices between brands do not differ that much anyway. Do-it-yourselfers tend to shop for paints at the big box chains because of lower prices, and information on paint quality does not seem to concern them as much. One idea you have considered is to bring on an interior designer to work in your paint store to assist customers, especially do-it-yourselfers, in creating the sort of space and rooms homeowners want, but are not capable of creating on their own. One of the perceived advantages of having an in-house designer is that when the paint color choices come up, obviously, it'll be your paint swatches that are suggested and likely lead to additional sales. Other expansion opportunities could ultimately play out, such as wallpaper products and other small decor items. You have identified a designer, but are simply not sure how to structure a deal with this person. Options include hiring this person as an employee to simply paying that person a commission based on sales. It is a managerial accounting function that is going to lend you the tools you need to structure this deal in a way that is hopefully beneficial. Building models that allow you to forecast the revenue and expenses that could be generated, assign probabilities to those underlying amounts, and make estimates of how this will affect your business in a way that supports good business decision making. How much would you pay for this opportunity? Well, don't answer yet, because we're going to throw in a whole half a course on taxation. When we talk about business expenses, we simply cannot ignore taxes. Corporate taxes in the U.S. hover around 34 or 35% for any decent-sized business. This means that 35% of the business profits are being shared with someone besides the owners, and that might be you. As a result, you need to be familiar with some of the fundamentals of taxation in the U.S. We are going to examine both business and individual taxes with a large focus on income taxes. We'll take a look at why we may have ended up with the crazy complex Internal Revenue Code, and we'll look at the fundamental types of tax planning you can use. We'll even take a stab at completing a few tax forms. Okay, how do we translate what we hope to accomplish in the course into a simple, easy-to-read list? Why, it's the course learning objectives. Go ahead, take a look at your syllabus, and you'll see what we hope to accomplish with this course. At the end of the course, students should be able to calculate taxable income and ultimately the income tax associated with individuals, corporations, and other entities. You should be able to compare and contrast the different types of taxable entities. You should be able to assess the effects of personal, investment, and business transactions, individually and collectively, on the federal income tax, gift and estate taxes, and other selected taxes. Hopefully, you'll be able to define and illustrate various cost terms and concepts and evaluate their relevancy for different decision making. You need to be able to discuss the impact of technology on the manufacturing environment and its implications for product costing and the development of activity-based costing and management. Should be able to explain the development and use of standard costs, prepare and interpret variance analysis reports, and relate them to responsibility accounting and control. And lastly, you will be able to explain the purposes of budgeting, prepare a master budget and its component schedules, and relate the budget to planning and control. The assessments prepared to test your knowledge are focused on these items, and thus it makes sense to bear them in mind throughout the course. As if that wasn't enough, each module also comes with a set of learning objectives that are tied into these objectives. Thus, for each module of the course, you can expect a set of expectations as to what's going to be expected of you. You can expect the differing forms of assessments, quizzes, homework, exams, assignments. They're all designed to address these learning objectives as well. After all, these are the focal points of the course. The course follows a predictable pattern. First, consume the reading and videos. Then, practice using the homework and assignments. And lastly, assess your learning using the quizzes and exams. Pretty straightforward. All this information is available and waiting for you in Blackboard. Everything you need to know for the upcoming reading, assignments, exams, etc. It's all available in Blackboard in your account. So be sure and review each module carefully so you can be certain you're not missing any assignments. Okay, that's it for this video. In the next part of the intro video, part 2, we'll discuss the learning materials in more depth. Items like your textbook, online homework, and the other learning tools. Thanks for watching.